Some of the most common questions I get from people who want to live off dividends but don't have millions saved up revolve around what kinds of investments would be most appropriate. Although mainstream news outlets will try to convince you that you do need millions to live comfortably off dividends. The truth is, if you've been watching this channel for a while, you're well aware at this point that you can make really good money off dividends with even less than $500,000 saved up. What can make this difficult is that a lot of the investments that allow you to do this don't receive a lot of attention from the traditional news outlets. Many people get discouraged once they find out how much they'll really need to invest to live off the dividends from a 1% yielding investment. So, in this video, I'm going to briefly go over what I'd consider to be some of the most crucial types of investments an income holder should have in their portfolio to live off dividends. Some of these I'll spend a little more time on and some will be more rapid fire. But with that being said, let's go ahead and get started. The first investment type we'll look at is real estate investment trusts, or REITs. These are companies that own or finance income-producing real estate. They own properties, lease them to tenants, collect the rent money, and then pass it on to shareholders in the form of dividends. You'll have REITs that are very sector-specific, so they'll only own things like hospitals, data centers, or industrial properties. But then there's also very broad REITs that own a mixture of different property types like grocery stores and gyms. On top of that, there's also two different types of REITs that exist. The most popular type that most people are referring to are equity REITs, which are REITs that own physical properties. But then there's also mortgage REITs that don't own physical properties but instead own or issue mortgages. Equity REITs are really good investments because most not only provide a decent dividend yield, but they also usually come with dividend growth. This is obviously important because once you make the switch to living off dividends, you'll want something that can continue to grow your income if you're not reinvesting your dividends anymore. It's for this reason I'd consider REITs to be one of the most important, if not the most important type of holding to have. In terms of what specific REITs I'd suggest taking a look at, you probably know at this point if you're a regular viewer that Realty Income, ticker symbol O, is still my favorite REIT of all time. They hold a very broad range of different property types and they pay monthly dividends, which is even better. But another really good REIT that's similar is Agree Realty, ticker ADC. They don't have the same track record Realty Income has, but they've been better at dividend growth more recently. And again, they also pay monthly. One more broad REIT that I really like is Triple N, ticker NNN. This company has grown its dividend every year for more than 30 years, and they have one of the best track records in terms of occupancy rating and dividend payouts. The second investment type I consider to be a must-have for income investors are business development companies, or BDCs. BDCs are companies that invest in small and medium-sized businesses to either help them expand or, in some cases, provide financing for distressed companies. They're sometimes compared to private equity funds, which I think is a pretty good comparison, in my opinion. It's also rare to come across a BDC that pays monthly dividends, but there are a few that do exist. What's great about these investments is that they pretty much always come with much higher yields than REITs, so they're definitely more geared towards income investors. However, the downside is that most BDCs don't typically offer dividend growth. However, some do, and some have been while interest rates have remained high. But I would not expect this trend to continue once rates get cut. I would also consider BDCs to be a higher risk kind of investment compared to REITs. There really weren't too many of these kinds of companies that existed during the 2008 financial crisis, and the ones that were around during that time, with one or two exceptions, almost all of them reduced their dividends to a certain degree. Some excellent companies in this sector would include Ares Capital, ticker ARCC, which also happens to be the largest BDC. Main Street Capital, ticker MN, is another really great pick in this sector. They are probably the lowest yielding BDC out there, but on the plus side, they do pay monthly dividends, and they do offer long-term share price growth and dividend increases. Another company in this sector, although still relatively new, is Blue Owl Capital Corporation, ticker OBDC. Despite only being around for about 3 years, they've already become one of the largest BDCs, and they've already offered some pretty good dividend growth and some special Dividends, the third investment type that's also really good for people who want to live off dividends, are covered call ETFs. These are funds that use a strategy called covered call writing to generate income for investors. Covered call writing itself is a strategy in which an investor sells call options on a security that they own in exchange for a premium. The premium proceeds from selling the call option provides additional income for the investor. In the past couple of years alone, these ETFs have been exploding in popularity, and today there's so many different companies out there offering a lot of different CC funds with their own unique strategies. Some ETFs will write covered calls on an entire index like the S&P 500. Some ETFs are actively managed, where fund managers will hand-select a wide range of securities based upon their own screening process. Some ETFs use something called synthetic covered calls. Some will only write covered calls on a handful of their holdings, and some will hold some other types of investments in them, including equity-linked notes. Some popular covered call funds that exist include the JP Morgan Nasdaq Equity Premium Income ETF, which is ticker JEC, and the NEOS S&P 500 High Income ETF, as well as the amplified CWP Enhanced Dividend Income ETF. Another good A consideration for people seeking income would be preferred stock ETFs. These are funds that hold preferred stocks, and there's really not much more to say than that. Preferred stocks are much steadier in share price, and they have more dependable dividends given their priority over common shares. There's a handful of ETFs out there that are pretty good. I like ticker PPFA, which is an actively managed ETF, and so far they've been pretty successful with their stock picking method. But there's also the iShares Preferred and Income Securities ETF, as well as the Invesco Preferred ETF. But don't expect there to be much, if any, dividend growth from these ETFs, since preferreds pay a fixed amount in dividends, and they don't come with the potential for dividend increases that common shares do, but they still usually offer very high yields and a steady share price, with oftentimes monthly dividends. Closed-end funds are another great pick for income investors. They almost always come with monthly dividends and with very high yields. They're very similar to ETFs in that they hold a basket of investments, but they're significantly different in a few areas. CEFs are almost always actively managed, and there's always a fixed number of shares that exist. This means that they can trade at pretty significant premiums or discounts compared to their NAVs. These funds can also hold investments you don't normally see in ETFs. There's honestly just way too many varieties of closed-end funds to cover them all in this video, and probably even an entire video dedicated to them. Many CEFs hold fixed assets like bonds and company debt. Then there's also CEFs that are very sector-specific, that only hold investments in certain industries like infrastructure and telecommunications. They can even hold everything that we've discussed up to this point, including REITs, BDCs, preferred stocks, and other diversified funds. So again, there's just so much variety when speaking about closed-end funds. There are some special considerations that you'll have to keep in mind, including understanding how their dividends are classified and what the NAV to share price relationship is. You can easily find funds that are yielding over 10% and even 12%, but these come with a lot more risk. An example of a closed-end fund would be the PIMCO Corporate and Income Fund, ticker PTY, which pays a pretty consistent monthly dividend. Some sector-specific closed-end funds would be the Reeves Utility Income Fund, ticker UTG, and the Cohen & Steers Infrastructure Fund, ticker UTF. One more alternative investment that also offers very high yields but unique tax considerations are master limited partnerships. These are publicly traded partnerships and are basically limited to the energy sector. So they're very similar to normal oil and gas company stocks, but they do offer much higher and steadier dividends because that's how they're structured. But don't invest in any MLP without educating yourself first on K1S. Though, unlike every other dividend-paying investment out there, when you invest in an MLP, you'll get an additional tax form called a K1 that must be filed with your income taxes. That's regardless if you hold the investment in a retirement account or not. So be sure to educate yourself on this issue beforehand. An MLP I personally like would be MPLX, which has had a really great history of high dividends with growth. Alternatively, if you want to hold MLPs but don't want a K1, you can invest in an ETF that holds MLPs. MLP ETFs don't send K1S to shareholders. So, in summary, these would be all the major investment types. that I would recommend income investors check out for their own portfolios. There's other alternative types of companies that do exist that do pay large dividends, but these are a little more obscure, and I think they're usually only worth holding in the short term. This would include investments like royalty trusts, yield costs, and exchange-traded notes. With so many of these investments yielding over 8% or more, you can earn a lot of dividend income from less money invested than a lower-yielding dividend stock. Let me know your thoughts and what your favorite dividend investments are. But with that being said, that's going to conclude today's video. Thank you all so much for watching today's video, and until next time, take care.